The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day after the market close. Tom takes your phone calls from 4 to 6 p.m. Eastern Standard Time using the data available at that time.
Let's go to Doug in New Jersey. Hey, Doug, what's going on?
Hey, Tom, how are you, sir?
I'm doing great. You having a good day out there?
Absolutely. That's my job.
There you go, man.
Tom, I just got your new book, and got to say, anybody who does technical analysis has got to buy your book. And further, it's the biggest bargain on the face of the earth, and, you know, people will just throw money at anything, but I would only suggest that people have got to read it. It's a must-read.
I appreciate it.
And now, here's Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 2 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day out there, safe day. Let's make it a great night, folks. Let's take a look at one of our 4 agreements. Ask for what you want. Find the courage to ask for what you want. Others have the right to tell you yes or no, but you always have the right to ask. Likewise, everyone has the right to ask you for what they want, and you have the right to say yes or no. Market-wise, let's take a look at it out here. We had the Dow up 152, NASDAQ up 33, S&P's up 13, gold contract down $10.90, trading at $1,499 an ounce. Silver down 10 cents at $34.66 an ounce. Platinum flat at $1,722 an ounce. Copper up 4.5 pennies at $4.27 a pound. Light sweet crude up 24 cents at $94.99 a barrel. Bonds down 0.5 point, trading out at 123.03. Dollar index down 37 ticks at 74.70. You got the euro up 60 ticks at 145, and the yen is down 27 ticks, trading out at 80.51. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at it. What do you have? We are at 1320. Start out May 2nd. May 2nd, you're at 1370. Get down 112 S&P points. We come back. Let's see. We get 40. You come back 62 S&P points. Game out here is that 1331, and that's where it stands at this particular point. Well, 1329, 1331. Where I'm going with that, folks, the 31st. Remember, if the 31st of May, we did 1.5 billion shares. We did 993 million today. You're coming into Friday, coming into end of the month, end of the quarter, 4th of July. Bottom line is that what you have at this particular point looks to me like we have the B to C of an ABC structure on the way down. That's on your S&P. Go to the Dow Industrials, same type of setup in the Dow Industrials. What do you have with the Dow? Dow's up $1.52 today. You're at the 12,414. And what you have game in here is the 12,443. That's the lows of the 31st. NASDAQ Composite. Composite, what we have, Composite up today, 33 points. We're trading out at 27.73, and composite-wise, we did 1.8 billion shares. What game there is the 28.08, which is, you know, that little baby can get into that tomorrow morning. I suspect what you'll see as we get into that also is the same type of situation, meaning that we've been dying on the vine up here. Nice acceleration, though. Beautiful acceleration on the way up. The 28.08 is the number that we're looking for. Now, check this out. The small cap's a little bit different. Russell 2000. We go look at the IWM. What you're going to see, I think she's done right here. She set up a nice Tiger Gartley. Bottom line is that even with the, which is pretty amazing, actually, even with the headline Dow and S&P moving, this little baby just couldn't handle it. So it's going to be interesting to see how this shakes out, because what you did have, as our man Mr. Steve Rhodes pointed out in his show on the 13th of June, is that the Russell had been leading on the way down. The Russell had broken the 77.35 area, which was the lows of March 15th. And yeah, I suspect same type of here. This is leading on the way up. So we'll see where that shakes out. The IWM right now, he had a high out there of 83.05, couldn't handle it, closed out at 82.08. If you are watching this on Tiger TV, what you're going to see is that the last sale on here was pretty incredible. We did 52 million shares. The last sale on this baby was 4.2 million shares. Big number, right? Right. Someone just unloaded and unloaded pretty good right on that close out here. Our phone number is 877-927-6648. Let's go to Michael in Florida. Hey, Michael, what's going on?
Hey, Tom, how are you?
I'm doing great. You having a good day out there?
I'm having a good day.
There you go. What are we going to look at?
Well, I wanted to look at Sam, give me, GG.
Okay, so this is the iPath U.S. Sugar Total Return Sub-Index.
Yeah, I'm wondering if it's... if I'm looking at it right, I have the A and on 131, January 31st at 104.98. The B at 65.34 or 9. I can't read my writing on 5.2, and the C at 88.18. Or do I have it backwards and it should be more of an ABC up with the 37.18 as A and the 104.98 as B? Are you with me?
Yeah, I'm just
okay.
I'm with you.
I can repeat those numbers.
I have it right in front of me here.
Cool.
Okay, so what he's looking at, folks, is this. He's looking at the sugar index. Now, what I'm going to do, let me
go to the S.
I'm going to actually bring up the sugar contract because that's what this trades off of. Okay.
Yeah.
So if we take a look at the sugar contract, oh, this is going to get fun again. I haven't traded sugar for a while. Sugar is a great thing to trade, folks. It's a lot of fun. Oh, interesting, man. Oh, I like what this looks like. Now, this is interesting because this doesn't set up as to the SGG, but the sugar contract. Yeah, the sugar contract. Okay, hold it. So we're right now at 28 cents a pound, 28.36. Let me just make sure. That's 8,000 contracts. Let me see. Sugar, 8,000. Okay, no, I'm going to use the October contract. That's 72,000. Give me 1 second. We're going to put up the October one. The reason we're putting the October contract up, folks, is it's more liquid. So let me put this back. Okay, so right now, the October contract's 26.34. That wants to bust through 27.57. Okay, so now let me go back to the SGG. Okay, so the SGG's at 88.18. Okay, I see. So this is what you have. If you're looking for an ABC structure, it's not an ABC structure, period, okay? What you just have is a consolidation on this. And, the top of that consolidation is 104.
Yeah.
And the reason I'm saying that, Michael, is this, is that what you've had is you have gone up from May 5th, okay, from 65 going up to 891. And then you see how you came down? Even today was way too much volume. If it was an ABC up, what would end up happening is you're up in volume.
No,
down.
I was looking at it down and I'm wondering if I was reading it wrong and it was actually an up.
Well, it doesn't have to. It's not a down or an up.
It's not a down or up.
Well, you got it. And the reason being is because of the characteristic inside the volume.
So the volume would need more at the top.
Need more on the way up versus less on the way down. And what this had is that it had big volume on the way down today. It rejected it. Had volume on the 23rd also. It just this is a situation that this vehicle is just no good. So
yeah.
Most of the time you get 36,000 shares traded. That doesn't mean a thing. What I did is I went over to the future contract, which it trades off of, and you got a lot more information. So watch this for a second. This is kind of weird, actually. That in the actual equity, it's trading sometimes there's 36,000 shares,
yeah.
And the contract is trading 150,000 contracts. That's like 100 times more than the shares are trading then.
Yeah.
So
yeah. Well, the way obviously, what did it do there when it jumped from $13 all the way up to 49? On the year 20.
No, I know. I traded it. I traded it up. I traded it down. Still, sugar's dynamite to trade in the futures market. It's a buck a point. So it's really cool, man. So
okay. So I read it wrong. Okay, cool.
Okay, man. Have a great one. Have a safe
too,
one.
Tom. Thanks.
Let's go take a look at, I believe Apollo just came out with numbers. The Apollo closed at 43.68. Right now, that's trading at 45.61. This is the for-profit education. The analyst sales figure is 4.67. It is pushing 4.65. We take a look at the equity, and bottom line is not much here. This little baby, we bring it back to 08. You set it up in a weekly. This has been going down for quite a while. Pretty amazing, actually. Well, it's not amazing. I mean, this is a company that just basically takes us and the government to the cleaners on a continual basis. Stock is down from $89 to $43. What gets interesting out here. So check this out, folks. I was talking about last week in Florida, this Taylor Bean, B-E-A-N. The guy that was running it today got 30 years. This is a $3 billion fraud, okay? $3 billion. But you want to hear something sick, folks? So it comes out in the sentencing, and it comes out inside the trial, right? That Fannie Mae, bottom line, in 2000 knew that Taylor Bean was a fraud. And so check out this is just about this is governments, regulatory agencies covering their butts and only care about getting their money back. So listen to this. The first sign of what would ultimately become a $3 billion fraud surfaced January 11th in 2000 when Fannie Mae executive Samuel Smith discovered that Taylor Bean sold him a loan owned by someone else. Fannie Mae, the government-sponsored enterprise which issues almost half of all mortgage-backed securities, determined over the next 2 years that more than 200 loans acquired from Taylor Bean were bogus, non-performing, or lacked critical components such as mortgage insurance. That might have been the end of Taylor Bean and its chairman and principal owner, Lee Fracas, who was sentenced today to 30 years in prison for orchestrating what prosecutors call one of the largest bank fraud schemes in the country's history. Instead, so check it out, instead, it's just the beginning. Fannie Mae officials never reported the fraud enforcement to anyone outside the company. Now, this is the part that's absolutely wild. Internal memos, court papers, and public testimony showed it sought only to rid itself of the liabilities and cut ties with the mortgage firm selling loans that had no value. They got this information off Smith, who found it out when he was working for Fannie Mae, and it was in a deposition. Is that a trip or what, folks? So you're talking about 8 years before they get the deal done. Now, you want to hear the sickest part? And this is where it really gets sick. Is that you have Fannie Mae, you have Freddie Mac. That guy and that company went from Fannie Mae, and who do you think buys all the other half of all the mortgages? Freddie Mac. Where's he go? Freddie Mac. Right into our pockets, folks. That's government officials doing their duty flat out. Just all 24 hours a day they're working. We're going to be right back.